Good afternoon and welcome to the Spreadex weekly market report for the 1st of June. Bailouts, elections, bond yields and Spain. They all seem to be synonymous with Europe at the moment, and a resolve does not appear to be very close. A back and forth match has developed between Spain and Greece as to who is more in the mire, with mixed emphasis this week. Talk of a bankier bailout stirred markets after the recapitalisation bailout plan was announced by the Spanish government, but then reportedly shot down by the ECB. According to an ECB minister, they were not consulted by the Spanish on any plan. If the bailout is completed, then the Spanish government will own 90% of the bank. Risky bond yields continue to surge as investors relocated their positions into risk-off yields. Germany and the US recorded low yield marks, while Spanish and Italian snuck towards the unsustainable 7% level as 10-year spreads widened. The European Commission said on Wednesday that the Eurozone should move to a banking union and consider directly recapitalising banks from its permanent bailout fund. It is believed that the IMF has begun contingency plans for a Spanish bailout, although these are not set in stone. Greece, though, did not want its Mediterranean counterpart to steal all the headlines. As the election draws closer, Conservative New Democracy Party led in 2 polls, the last before the elections on the 17th of June that are viewed as a de facto referendum on the country's future inside the Eurozone. The sell-off in light crude continued as the black gold dropped to its lowest level since last October. If this drips down to retail levels, it will be of relief for consumers as we head towards the summer holidays. The same effect, though, of price reduction will not be felt in Italy, after it was announced that an increase in excise duty will be put on petrol to fund aid after this week's earthquakes. The month of May saw the Dow contract by the most since last September as the year's gains were wiped off the index. Low consumer confidence and poor ADP employment figures were the catalyst ahead of today's non-farm figure, which has just been released as 65,000, much worse than anticipated. Corporate profits were also poor for the period, down 4.1% after strong earning reports in the early part of the year. Thus, the prospect of further quantitative easing seems like a potential, but at the moment it's unlikely, as the US posted GDP prelim growth of 1.9%, as their borrowing rates continue to decrease. It seems the focus on them remains on the Eurozone situation. In equities, Research in Motion, the BlackBerry producer, issued a profit warning and announced significant job cuts as the problems continue. The company's value has contracted by 70% alone in the last year. Wolsey saw Q3 trading profit up 10%, but lower than expectations, whilst De La Rue, the currency printer, revealed pre-tax profit of 73% as their order book fills up. BP revealed Friday of the potential sale of its Russian arm TNK BP, having received interest. Ithaca Energy ended takeover talks, having been under bid rumours for a while, with the stock plummeting from 175p to uncross 125p. Kingfisher announced that sales and profits had been hit by the adverse weather conditions, whilst Thomas Cook stated that tough trading conditions continue. Now we look at next week. It is of course the Jubilee weekend, and there are 2 bank holidays on Monday and Tuesday, so UK markets are closed. We have US ISM manufacturing figures and the trade balance. These are released Tuesday and Friday respectively. We have Euro bid rates and the UK bank rate, which are released Wednesday and Thursday, whilst there is a limited number of companies reporting, including Just Johnson Matthey and Synergy Health.